This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. It has been a choppy 24 hours in the grain sector. Corn, soybeans, wheat, all kind of experiencing some volatility on headline news. I want to start looking at the corn contract. Corn retreating off of the recent highs. We failed to get out above the Tuesday and Wednesday's high today, 387 and a quarter to 389 and three quarters. That's going to be pivotal resistance going forward. If we can achieve a conviction close above that, I think we start to encourage additional short covering. But until then, it's kind of a little bit of a range-bound trade. We're coming back to test yesterday's lows as well as a gap. That comes in between 375 and three quarters to 378 and a quarter. A breakdown below here neutralizes the bullish chart setup, and I think puts people off to the sidelines until we get a new catalyst to give us a new direction. Now, moving over to the soybeans, very, very volatile. We've been watching 897 to 901. This is an extremely important pivot pocket for us. If we can get back out above here on a closing basis, I think that takes us back towards 916 to 923, which represents a key Fibonacci retracement on the year as well as the 50-day moving average. From there, I think it's a coin flip. If we get out above there, I think we spark short covering and see an acceleration higher. However, on the flip side, a close back below 897, I think it invites sellers back into the market, maybe encourages some long liquidation down to 878 to 881. So again, the pivot pocket we're looking at 897 to 901 to wrap up the week. Moving over to wheat. Wheat broke out above the May 29th highs, 570 and three quarters, and accelerated, testing near the limit on the day, and then has retreated nearly 30 cents off the high. There was news earlier in the session that Ukraine was going to limit exports. They came out later and walked that back, and that brought the sellers into the market and encouraged long liquidation. As far as some of the technical levels go, 542 is going to be a big support area to keep an eye on if we do end up closing the week near the low end of the range. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.